I do want to give a round of applause to all the degens that stuck around for the bear market.
Congratulations.
If you're still here
You made
after
it.
everything we've been through the last 2 years, and you've been learning and stuff, like that's what's going to separate the winners from the losers. Most people walked away by now.
How it's crazy because I think we're up since last week when we did this podcast. I think we're up like 1,000 or 2 in Bitcoin. But how like boring has this week felt compared to like the last
it's
2 or
crazy.
3?
You get those spikes of dopamine and like euphoria, and then we'll have like a week of like sideways price action consolidation. It's just like and then you're like the market goes down like 0.5%, and you're like the bear market's back.
But I think we were under 35 last week when we filmed.
Yeah.
And right now we're like a little bit under 37. I think we're gonna do the trading view now to take a look at that.
Yeah. So I'll pull up this chart as usual. We look at a little bit of TA. We don't spend too much time on it, but this purple line right here is the end of the year. So this is January 1st, and it looks like from where we're at, it looks like we're gonna have some good Thanksgiving talks with the family. Because I know last Thanksgiving people were asking me how crypto was, and I was like, I lost everything.
Well, last Thanksgiving was just like literally 2 weeks after FTX collapsed.
Yeah. Mm-hmm. And then that's where you have the conversations of crypto's a scam. Like people like correlate bad actors or FTX, and they correlate it with crypto. And like we talked about before, like there's always going to be bad actors in specific niches, whether it's real estate, crypto, stocks, anything of that nature. But yeah, we're sitting at just under shy of 37,000. We're sitting at 36,854, and we're looking at it on the weekly chart. So we have a lot of momentum coming in. We're back up to that level about Terra Luna. We're definitely way above the FTX levels.
We are almost at, I think we were like flirting with or right around 40,000 when Three Arrows Capital, Terra Luna
blew up.
When all that blew up, we were right around 40. So I think getting back to 40 after all that, plus FTX, plus the counter trading with Alameda and all that stuff that was going on, getting back to 40 is a pretty big deal.
Yeah, it's a pretty big psychological level.
Pretty big
I
deal.
think we're going to have a little bit of a test of a resistance at that level. I don't think we're going to smash right through it.
Depends.
Yeah, what's your thought process on that?
Depends. It all depends on this ETF. If we don't get the approval until January, then probably you're right. We'll probably, I think if we don't get, if that ETF goes in the beginning of January and we go the next month and a half without the approval, we'll probably go sideways. We'll probably even potentially go back and retest the low 30s again.
Yeah.
And then maybe potentially bounce back off that. For those of you degenerates that like to trade, there might be some good opportunities down there. Never trade your Bitcoin.
I don't.
But
I don't think people realize how big this ETF is. I have a chart pulled up right here, and this is a reminder that this has happened when the gold spot ETF was approved back in 2004. You can see the gold price just parabolic right after the ETF, and then once the market cap
can you see that? What's that price? What was the price of the gold ETF?
336 euro.
So 336 euros. That's less U.S. dollars. So somewhere in the neighborhood of 300, and it's sitting at what 2,000-ish right now.
Yeah.
And that's 2004. So that's 19 years. So in a span of 2 decades, it did a 7 or 8x.
Yeah.
So when we talk about, Bitcoin reaching gold's market cap or, flirting with gold's market cap, that's basically if you 10x where we're at right now, you're sitting at 370,000. So 7, 8x, my quick math would be somewhere in the neighborhood of like 250.
Mm-hmm.
And we're like, that's my top. That's not my conservative top is 120, but my aggressive top for this cycle would be about
That'd be crazy.
250.
That happened.
So I mean, you saw the gold ETF make all those moves in a much less mature market that also didn't yet see the great financial crisis, which also occurred. And I believe that we're going to be seeing some sort of recessionary factors, if we're not already, which I think we are in a recession, depending on which side of the political spectrum that you want to listen to, of if we are or if we aren't. But I think there's a lot of indicators that traditional finance people would say that would put us in recession at this point. And I think it's only going to get worse. We talked about it last week with real estate and all that, the stuff that's going on with those markets. So, people are squeezed, money's tight. And when those types of things happen, you sit in these environments where, you see something like the great financial crisis being another possibility, especially when it comes to real estate, is vulnerable as that is at this point.
We'll definitely dive deeper into like the real estate market. But before we move on, let's take a look at the Ethereum chart, because I'm the ETH maxi. I wouldn't say I'm an ETH maxi. I like to make money maxi. So whatever opportunities present itself. 2100 sitting at 2100. We're outperforming Bitcoin.
Is it at 21 right now?
Is it flippening?
Is it at 21?
Yeah,
what's the market cap of Ethereum right now? Can you read that to me?
It?
Can you read the market cap for me, please? Make sure you speak into the microphone.
300 billion.
And what's the market cap of Bitcoin?
600.
Yeah, that's not a flippening. We're still a ways away, guys.
Yeah, but we'll see. Well, we got some good news. We have BlackRock spot Ethereum ETF plan is confirmed after the NASDAQ filing. So kind of the same deal. iShares Ethereum Trust. So this is where Ethereum would be in pensions, 401ks, and new money will be flowing into this ecosystem, which is institutional adoption, which we want. People say, like, isn't crypto unregulated? Isn't regulations bad? Like, we want regulations where it needs to be regulated, like an exchange, like a Coinbase or an FTX or a Gemini. Let's take a look at Solana, because this is this was like 5% of my portfolio, and after this latest jump, it's getting up to like 15. So I took some profits at 62, and I sold a little bit under 5%, and I just converted into Ethereum. So I'm rotating profits. Now, people, when they say take profits, taking profits isn't selling your high quality coin and converting it into a shit coin or a meme coin to hope to like get more gains on that play already. Like, taking profits is taking profits into Bitcoin, Ethereum, or stable coins or fiat. That's a form of taking profits. Taking profits isn't just swapping it into another shit coin. But I do see the long-term potential of Solana. It's just, I don't know if you've ever really used the product. And that's what I like to tell people. No. Before you invest in something, I like to use the products. I actually like to see the user experience, the UX, and see if it makes sense. And if I like the product, I like the tokenomics, I like, the community behind it, the developers are building in the bear market. There's software out there where you can actually like see how active the company is on Twitter, because every crypto project has a Twitter, unless it's like some scam coin that just someone made a token address contract and people are buying it. Yeah.
And you should, like you said, like at the very least, if you're investing in these these projects, at the very least you should know who the people are that created it, because if they have sketchy pasts, that's a good like red flag on should we move forward in this project. Vitalik, he's got ties with Bitcoin Magazine. Some people say he founded it. He didn't found the magazine. He's just one of the early. He was in that early big investor in Bitcoin early, pivoted some of those funds to create Ethereum. He doesn't seem to be. I mean, I give Ethereum a lot of shit. Talk a lot of junk about it, but like he seems to have the right intentions, but the only issue is that you got the foundation, you have a conglomerate of people that make decisions for that coin, that the protocol can change at any given time, which doesn't make me comfortable. That's it's not just that I'm a Bitcoin maxi and everything else sucks. It's like the fact that Bitcoin's protocol can't change. And when they tried to do that with the block size wars in 2017, they had a fork of BSV and Bcash, and Craig Wright went his direction and Roger Ver went his direction, and they just created new coins, and Bitcoin kept trucking along. So you can't change the protocol of Bitcoin, and these other coins. What's the Shibarium? Was it Shibarium upgrade or whatever that was, where it was able? And again, that was actually decent. I'm not even gonna like try to shit on that, because they made it more deflationary, which was a good thing. Yeah. So it was actually a good thing that they did. But the fact that they can do something like that also means that they can do something that maybe we don't think is good as well. And that's the stuff that makes me nervous when it comes to Ethereum.
What is your portfolio made up of?
90.
That's a maxi, right?
90 lots of percent of Bitcoin. Yeah. Probably like 97% Bitcoin. actually, with the performance of Chainlink, not counting the coins that I have locked up in Gemini Earn at this moment, because that would be, I have a couple Ethereum locked up in that. So Ethereum would be my second position, but I don't even count that. I just figure that that's written off. So Chainlink's my second, which probably has about 2% of my portfolio. Ethereum's probably like 1%, and I have like a couple AI coins that are complete shit coins.
Those are some good categories, narratives. Some people do ask me, they're like, what do I buy? And like, people overcomplicate it. Like, just look at top performing categories, and I can name 4 right now. AI is going to be huge. Crypto gaming,
yeah.
Real world assets, and then liquid staking tokens. So once you identify the categories, look at the strengths, weaknesses, opportunities, and threats, a SWOT analysis of each protocol you're looking into invest in. So a perfect example of this, and this is not financial advice, Chainlink, a real world asset, brings data on chain. That's a really great...
Interoperability is the word that they like to use. Yeah.
Yep, oracles. Yep. And I mean, that's performing, since we last talked about it, it's up 40, 50%. We have Render, which is AI. Gaming is huge. So Illuvium, Sandbox, these coins I see potential in, and I performed the SWOT analysis on it. I know their strengths. I know what could potentially, be a threat to the protocol, their competitors, stuff like that. And then I like to audit it and see if it makes sense for my portfolio. And then I'll go in and adjust the percentage portfolio allocation for each protocol. What do we have? Liquid staking tokens, Rocket Pool, and Lido. I know you're not big into the liquid staking stuff.
Speaking different language to me right now, brother.
Yeah, so Lido and Rocket Pool, these are, in my portfolio. And then we have, what else did we say? Real world assets, AI, gaming.
Let me ask you a question, because you're making really good points.
Yeah.
Would you, if somebody asked you, not me, just some random person asked you that, would you consider crypto right now in this moment to be mainstream? Would you answer yes or no?
No.
I would answer it the same way. So I'm glad you said that, because when you talk about like the gaming aspect, right? Like gaming, the gaming
Illuvium
stuff.
just got listed to Epic Games.
So my son, my 12-year-old son, likes to play these games and like spend money on these games, and it's like you spend this money on these games and it's locked in that game, right?
Yeah.
So if he's playing Fortnite, let's say, and you buy those skins or you buy whatever the product is on that game. Yeah. Let's say you just get sick of playing Fortnite. Like, all the value in that game has been lost because you're not playing that game. Everything you spent in that game is gone. I think with some of these tokens, if they play their cards correctly, and I know this has been talked about a little bit, so I'm speaking from a place where I've read of some of this. If they figure out a way to have some sort of universal token or tokens, let's say EA Games, right? EA Games for sporting. Let's see all the sporting games. If they came up with some sort of like universal token where if you played Madden or you played 2K or you played FIFA or whatever all those games are, and you spent money in those games, that there was some sort of real world value token that you can transfer from that game to another game, I think there's a lot of value there.
You're talking about an NFT.
I mean,
depending on the game, there's governance and utility tokens. So like Sandbox. So you use sand tokens to go in the metaverse and use that to buy things and, sell, digital assets. I know it's different, but think of it like this.
I understand what you're trying to say, but like the crypto bros are like grabbing their NFTs and they're like making it into a Twitter.
Well, not every NFT is an investment.
I understand. You probably are. You're probably right.
Yeah.
You're probably right.
Like when I first got an NFT, I would buy like a ticket or like this NFT, and I didn't realize what it was, and it was just access to the game. It's not like an investment, right? Like you'd buy a game for $60 in the Epic Game Store. That money goes to Epic Games. Well, you just buy this NFT, and then you have access to the game, and then you can sell that NFT to someone else that wants access to that game.
These things will print when people are doing it because they're not trying to make money.
Yeah.
So when my son is spending money on Roblox or spending money on Fortnite or any of these games, and he can say, you know what, I'm sick of playing Fortnite and Roblox, I'm going to go play a game, whatever, and he can take those tokens from that game and transfer it to the next game that he wants to play and build on that. Right. Like when people are doing that and they're not doing it necessarily to make money, there's just a whole huge ecosystem of people operating in it. Yeah. That's when those types of things will just print.
And I'm already,
in my opinion,
and I currently just bought a plot of, and this sounds nuts, but I just bought a plot of land. Well, I wouldn't say bought. I invested in a plot of land in the Metaverse, the sandbox, and this is where we can use, we can produce content, and we're right next to the largest crypto exchange, Binance. And if you look north of it, we have all these venture capital funds, hedge funds, all these big, finance names in the top northeast of the Metaverse. And if you go down south and towards the center, you have the concerts, the Snoop Dogg's, the Steve Aoki's, Gucci is in the sandbox. So you have, the consumers. So we're going to have the consumers and the producers and the creators in the Metaverse, just like we have in the real world. So there's going to be two types of people. And what I'm trying to do is front run the opportunity, buy up the land because there's a scarce amount of this land, and then use it to monetize it and turn it into, because like we're on the map now. Like if people look at the sandbox, map, they'll see us, Define Labs. And then what's cool about it is you can click on it and it's linked to our social medias. You can go and you can create an experience. So right now I'm crafting and I'm building an experience in the Metaverse. And what happens is someone could come in and see the same experience that I've created. It's kind of like a Minecraft or a Roblox, and I'm building things in the Metaverse, which is like going to be a consulting educational firm, where we can educate people on DeFi. So if people want to learn and they want to educate themselves, they just click the experience. They come immersed in our experience through an Oculus. It's not going to be where like people are going to be looking through a flat screen. Like they're going to be fully immersed in this experience, and then they could, all come together and engage in a unified way, and it's the way the world's going.
I think you got to when this thing really starts to get going, this bull market gets going, you got to put a video up on our YouTube about
I will right now, whatever we're talking about.
I'm saying like just like one of those like educational videos where you would like BitBoy Crypto used to do those videos where they would have like an 8-minute video explaining the Metaverse and like what it is and how you invest in it and where it's going. Like one of those type of like where you're talking to the audience and explaining, because like I'm sitting here listening and I know this because I'm in it, but I like some of the stuff that you say is just like goes over the Bitcoin Maxi's head because I'm just like, I know it. I know what you're saying because I've read on it, but like I don't completely grasp it, and I'm in this ecosystem. Yeah. And you just basically took like a minute and a half and explained it. I think if you really like put the thoughts together and also showed a graphic, some people would really.
I'm gonna pull it up.
They would be like, oh, like look at that. Like that seems, because I think that I was thinking in my head like, what demographic is this for? It's not so much for like 45-year-old me or like 55, 60-year-old. This is more like the younger, like someone your age or a little bit younger that like would be into and understand, and also would consume a video in a short amount of time to say, bam, that looks cool. I want to do that. And I think you're well versed in understanding the background and explaining it to somebody that you'd be really good at doing that. And I was while you were talking, I was thinking that, and I want to make sure I put that on tape to make sure that we.
Facebook changed their name to Meta. Yeah. They come out with these VR headsets. Yeah. It's just a way we're going to interact online.
Agreed.
An immersed experience.
Yeah.
And it's
and you're gonna have to like guys like me are gonna have to adapt.
Yeah.
Like we're just gonna have to, whether we like it or not, we're just gonna have to adapt because that's where things are going.
Yeah, it's cool. I think the crypto world, it's gonna be more just than finance. It started out as finance, but it's gonna go and it's gonna be a lot of it's gonna be gaming. That's a multi-billion-dollar industry. Real estate. There's gonna be a lot of things. I think blockchain is gonna suck. It's the new internet. It's gonna suck all the value out of the physical realm into the digital realm. And I know it might not make sense right now, but when there's a technology that people don't understand, like kind of like Apple, like no one really knew what Amazon was back in the early days. But when there's a technology that people don't really understand, but it's a threat, that's when it's a pretty good investment. So
our lives are consumed online, right? Yeah. We're everything. You don't even realize it. Mm-hmm. Everything you interact in is web-based. Yeah. It's all on the internet. Everything is on the internet. So it's only natural at some point in time that our money was based online. Yeah. Right? So like this has just been a shift from the fiat experiment failure that we've beaten dead to a pulp that we've talked about so many times, that our money was eventually going to be some sort of internet-based money. And we see it in the early stages of the internet all those early e-golds and those attempts to try to do it, and they couldn't figure it out, and they failed, and they couldn't solve the double spend problem. And all those early, like Nick Szabo and all those guys, the cypherpunks that were trying to figure it out. And then, October 31st, 2008, this white paper gets released, and, Bitcoin is born, and we've been on this ride ever since. And it's just like baffling to me at this point that people can't see that the money is going to be the money is already, we've talked like 97% of the money that's in circulation doesn't exist physically. Yeah. So it's only natural that we're going to go to this society where everything is online anyways. So wouldn't you want your online money to be finite and be something that's not debasing at a rapid pace? Bitcoin just makes sense in so many different ways. And, sometimes I get frustrated. Like I really do. Like I want this to go, not even because I want Bitcoin to be worth millions of dollars today. I just want people to understand things more faster than they are so they can see that like the transition. And I get it because for me, it took years for me too. And I've talked about this, like the day I got into Bitcoin, the light bulb didn't go like 100% for me for a couple years. It took until probably 2020, 2021, where it was like when the pandemic happened. I don't know if we can say that word, if we're going to get, blacklisted on YouTube for saying that P word. We can clip that out. But like when that occurred and I just watched 40% of the entire supply of money ever created be created in a 12-month span. When I saw that and the money printers just went like absolutely insane, and you just watched all these prices go wild, and you're like, man, like we kept saying that it was a failed experiment because of like we watched inflation go from 1913 all the way up until like the middle 2000s, and we just watched the dollar continue year after year, slowly debase. You could have a chart that like every 10 years it was losing like 10% and slowly debasing. Then you just saw this huge ramp up in this short period of time where you were like, holy shit, what just happened? What just happened to our money? Why is everything so expensive? And then the light bulb was like, yeah, I get it. I knew, I'm like I said, you come for the money because I'm like, oh, this thing that might be worth a whole bunch of money someday. And it's like, no, that's not why I'm here now. I'm here because that's the flood's coming, and that's my life where I have to out of here. That's how I survived this.
Yeah. Can you talk a little bit about money being separate from the state? What does that mean? Like you said, you come for the money and you stay for the revolution. And I don't think people realize how powerful money is that's separate from the state.
I don't know if they want us to talk about that because these videos that we try to post
about
it are getting it's a very important question, and people, my opinion is people should know this stuff because this is the money that they're dealing with, that they're buying goods and services with, that they're trying to set their selves and their future, generations up with. The people closest to the money printer benefit the most from monetary policy. Yeah.
I think I actually have a question finally.
Go ahead.
Yeah. So I'm a guy, just the producer. I produce the space for people to know who I am. My name is Rich. And so I've been sitting here and I've been listening now for several weeks. And I'm trying to wrap my head around this. I'm a 55-year-old guy, and I got my, my tax shelter annuities and all that stuff. And I know a little bit, but here's my funny thing. I'm thinking and I'm listening to the changes in this market. And the funny thing that keeps popping into my head is how, again, I'm a media guy, the changes in media that happened 20 years ago. Like, suddenly we had the internet, and people started having online stores. You were shopping online, and people were like, that's a fad. Who wants to shop online? And then things like the newspaper industry. Like, people are always going to get a newspaper and magazines. And how could Time magazine fail? And it's to me, a lot of what you guys talk about reminds me of like 20, 25 years ago as the internet grew and the people that were smart enough to realize the shift in the way people were going to shop and receive their entertainment. You think of how music has changed, when Napster and all those types of things, that people were smart enough to get in. And I think I'm starting to realize that what you guys talk about is just a different type of currency that a different type of investment property that more people have to start paying attention to.
Yeah.
I'm not saying I know how to do it yet, but that's kind of how. Am I really far off in that really long-winded analogy?
No, that's correct. I want to share something with you that I just actually watched 2 hours ago. I shared the clip with you. I didn't even know this until I watched it 2 hours ago, but it's crazy. If you look at stocks, there's about 7,000 publicly traded companies in the S&P, the NASDAQ, and the Dow. If you take 7 companies out of those 7,000, okay? You take Apple out, Google, Netflix, there's like 7 companies. If you pull those out of all the indexes and you look at the rate of return since 2010, it doesn't outpace inflation. 7,000 companies. And you have to remember, from 2010 until 2020, huge bull run. S&P up hundreds of percent. NASDAQ up hundreds of percent. The Dow going from 6,000 to almost 40,000 points. Like what's that, a 6-7x?
Yeah.
Insane returns, right? But when you look at inflation, inflation is important to always look at when you're investing, because it doesn't matter how much money you make if it doesn't buy anything, right? Think about it from living in like New York City and living in Niagara Falls. If I make $100,000 in Niagara Falls, it's completely different than if I make $100,000 in New York City, right? Where I'm at,
right?
Because of what the price of things are. So when you're looking at your investments, you have to look at it the same way. Is my investment outpacing inflation? What does inflation look like? Okay, so we trusted human beings with the ability to handle printing money. We trusted these individuals to be smart and to be conservative in how they decided to flood the market with new capital. When Richard Nixon made the announcement in 1972 that they were going to temporarily pause the convertibility of gold into the United States dollar, we had to trust our government. Right on the bill, it says, full faith and credit, United States government. We had to trust our government to be smart in how they printed money in order to not cause what we've seen in the last couple of years to occur. So now it's not only like, I go to the store and my eggs cost a lot, or I go buy a car and car payments are absolutely astronomical. It's also like you have to look at investments, because for a while, and Rich, you can probably relate to this. Like when you look at your portfolio from 2010 until 2020, it looks awesome, right? The appreciation in price from investing in stocks, a monkey could have put money in and made money in that 10-year span, right?
And I'm that monkey. I mean,
but
I'm looking at it, I'm following it, and again, I'm a retired school teacher, so I had my 403B, and and I just put my money into it, and I knew enough about how to be aggressive with certain things, and I made adjustments every year with my guys, and I definitely but I always am concerned. I did all that research leading up to my retirement. How much money should I have? Granted, I have a pension, so I'm in good shape, But if I had to live off of my investments, forget about it. I'd still be working over there. I would have to. And also, when you think about, everybody's, look how great I've done since 2010. But I was at work in 2008 when I saw my portfolio go in half. Now, I knew I had a long time to go to get it back, and I got it all back and more.
Yep.
But how much farther would I have been if those decisions that led to that weren't so bad? And I knew guys that had retired, and like in June of 2008, and were counting on that money, and many of them went back to work.
Yeah. I want to circle back to your original question, because this is where I'm trying to go with it. So if you started your work career in 1993, 30 years ago, and you sat down with a financial advisor and they mapped out what you're going to need to put away in order to retire, right? When you sit down with that financial advisor back then, he might have told you in 1993 that if you can accumulate $1 million, that you'll be doing really good by the time that you retire. What that financial advisor can't do, and what no financial advisor can do for you, is predict future monetary policy. They don't know what the government, what the Fed, what's going to happen with the people that control the money printer, how they're going to make decisions and change the protocol on you and make that $1 million that you think you did really, really well to save not be enough and be in a position where you're stuck because you didn't save enough. You did everything right, but the monetary policy shifted, and now that $1 million that you saved back in 1993, the equivalent of what you would have needed to equal the $1 million from 1993 is $2.3 million.
Right.
You need $2.3 million today to equal what the financial advisor told you in 1993 you would have needed 30 years down the road. Because nobody, not us, I don't know, I can't predict it. We can't predict future monetary policy. The reason why Bitcoin is such a great, unique prospect for us is because I can predict future monetary policy all the way through 2140. I know exactly what the protocol is going to do. I know exactly what the deflationary factors will be. I know exactly how it's going to work. So that's why we say like it's going in the opposite direction of the dollar, because the dollar is continuing to be debased. So it's going in the opposite direction. Everything goes to zero to Bitcoin because Bitcoin is the only monetary instrument that exists that we can predict the future of. We can't do it with Ethereum. We can't do it with anything because they can change. All those protocols can change. And most importantly, United States monetary policy, which is the world reserve currency, we've seen change just in the last couple of years. Like if you talk to somebody in 2019 and they sat down with a financial advisor then and they got information from that financial advisor in 2019, I guarantee you that things are way different today in just 4 years. And it's not the fault of the advisors. It's just the change in the policies. It's the change in how they are printing money. So, last week we talked about, the people closest to the money printer benefit. It's like those 500 and something people in Congress, they're all legislating and they're crafting, and it's like, they're all inside traders. And it's like, it's not even that complex. Like, it's not even like they're all like going on their E-Trade account after like they pass a bill and like trading the stocks because they know. They're so close to the money printer that they can craft policies where they don't have to do anything different. They can just make what their portfolios already look like.
Yeah, like if they want to do real estate, they can buy the real estate and then propose a bill which is going to benefit exactly the type of real estate they purchase.
100%.
And they've done that for as long as I followed politics.
So when you debase the money, this wealth gap that we have, the reason why the wealth gap exists because all the money goes to the people that are closest to that money printer. The people that we're paying to be public servants that aren't making that much money, relatively speaking, to their net worths, are just watching their net worths explode. And then what ends up happening is these regulators that are supposed to be regulating, they get a job at JP Morgan. They get a job at Chase Bank. They get a cush job at Wall Street making 7 figures. So Jay Clayton, great example. I've been around in Bitcoin and crypto long enough to know when he was the SEC chair. And he left the SEC crafting the bit license, which made it impossible to trade on Binance and open yourself to all the thousands of cryptocurrencies that were out there in 2017. That was his parting gift leaving the door. You know where he went? He went and worked for a pro-crypto company. So he makes an anti-crypto legislation and then takes a job on the other side of it because they're just going where the money's at. So I don't trust, every single podcast since the beginning, we end it by saying, don't trust, verify. And it's not just like something that we say. It's like, I don't trust anyone when it comes to finances and money. And the beautiful thing about Bitcoin is I don't have to trust it because I can verify what's going to happen. I can see the blockchain and verify every transaction back to 2009, and I can see what's going to happen all the way into the future. That's why I'm so passionate about this. And that's why I say I came for the money and I'm staying for the revolution, because this is the safety net. Did I answer the question?
I think you did. I mean, I think like all of us, like we're looking at what's the best way for me to, I have money and I look at I have 2 sons, 22 and 24, and I look, I'm looking at the one who has a fair amount of money, no college debt, making pretty good money, but like just with interest rates right now, and the ridiculous inflation, overvalued real estate, it's just crazy. I mean, we didn't learn anything from the 2005 through 2008. You know, 3-brick ranch going for $500,000. And I think this generation, I think the interesting thing about this generation of folks that are in their 20s, that is, they're becoming aware of why they've kind of been sold out in terms of by their government, let's say. They have to figure out how they're going to navigate their finances in a different way. They can't do it based on calling up their dad and saying, "Hey, Dad, should I get a Roth?" You know, like, yeah. I mean, I worry about folks that are younger that aren't savvy, and they've got to start figuring out what are they going to invest in, because they're going to need to invest, or they're going to be working until they're 80. You know, they're never going to have that quality of life, and that I think I'm lucky enough to have in my generation. So, but my generation is part of the reason we're in this trouble. So,
what do you think? Because it's your generation that's on pace to be the first one to be worse off than their parents.
And I can't imagine the generations after.
Yeah.
Yeah, that's crazy. You think Bitcoin, when you talk about it a lot being a life draft, and you talk about the wealth gap, how the rich get richer, and you know that. Do you think there's going to be a wealth gap for the people that are smart enough to buy this scarce asset? Do you think it's the wealth? Because I hear people saying that there's going to be no more middle class. Do you how does this fix that problem, or do you think this creates a bigger problem, or do you have any thoughts on that?
There's only 21 million. So the early adopters will obviously be better off than the people that come in later. But this is why I was going to say to you, Rich, as well, to advise your kids and anybody else that's trying to navigate if this is something they want to dip their toes into. Before you invest $1 into Bitcoin or any sort of cryptos, the first thing you need to do is to research what money is. What is money, and how does the system work? How is money created? When we say money printer, what does that mean? Like, you have to understand all that for anything to click. It can't just be, I'm trying to buy Bitcoin at 35,000, and when it goes up to 60, I'm going to sell it. It can't be, I'm just going to buy shitcoin X and then 10X that and then just get out and then just be happy. Because, okay, when you make your 10X and then the debasing continues to happen, at some point it catches back up to you, and then what? So you have to do the research to understand why this even exists. There's a reason why Bitcoin was created. There's a reason why we're even having this conversation and we have this podcast. It's because Satoshi, whoever he or they were, recognized where we were going, even before the financial collapse of the early parts of 2020, that this isn't sustainable, that we're going to have to find some other way of storing our wealth.
So do you think, and you talked about this, how crypto is not a currency, it's digital property. Mm-hmm. Would you be able to explain that a little bit further for the viewers on what that means as a store of value, digital property, and how it's not so much a cryptocurrency? Because people think Bitcoin's a cryptocurrency, right? And there's other currencies.
I think that's part of why it's so scary to people.
Yeah.
I think because they don't know what it is, and I think they don't know how to think about it. And I think you have to like content that I create. I think of it in a different way than I used to, and it's intellectual property. Think of it what you guys are creating is intellectual property. It's more than just content, because there's value in what you say, whether I agree with you or not, or if I listen to a sports podcast, I have to listen to that and decide how I want to take that information. So it's intellectual property, and it's in the same way I think that most people think of crypto. And I still think of it this way. I think I have to keep separating it, that it's not like some currency that only exists like Monopoly money, or like when my kids had Webkins. They were buying stuff. But in a way, it's like property. It's like real estate in a sense, correct?
Yes, it is. And this conversation and what Rich is saying is why you have hardcore toxic Bitcoin maximalists that hate crypto, that can't stand Ethereum, that can't stand all these other shit coins, and they talk so vile about those coins, because here we are, and we're trying to like have a conversation with somebody that is learning, and that gets caught in their head about the cryptocurrency piece. And again, like I said, the beginning parts of me getting in and thinking, oh, it's a great thing that somebody's accepting Bitcoin, and thinking that was like, oh, that's a great deal, because we still thought of it like a currency until the light bulb went off, and it's like, no, this is a store of value. It's not, I'm not trading this thing. I'm not trying to buy something with it. This is it. This is how I'm storing my value. This is the only thing that's outpacing everything else. Everything else is going to zero relative to the price of what Bitcoin is doing. So all these other currencies, all these other coins, crypto coins, your Ethereums, your Solanas, your crypto coin X, like those are more, even the stable coins being created, like those are the things that are currencies per se. Whereas Bitcoin is like real estate, or like a Picasso painting, or something that I'm going to own that's going to hold my value, that I'm not going to, like, I don't own a Monet or a Picasso and look to trade that with somebody. You know what I'm saying? I don't own.
See, that's a really good analogy, more than I think I even, definitely when I said that. I think of it as the why people buy art, where they invest in, you know, a certain collection or a book or whatever it is, and it's not in a library. I mean, it's a secure place.
We made a video maybe like 9-10 months ago where I talked about like, and I meant it at the time, and I still mean it today, and people will take it whatever they want, they want to take it, because I'm looking forward. I'm not looking at today. I would much rather own Bitcoin right now let me be clear, because I wasn't clear then. I would rather own Bitcoin for the next 100 years than a piece of property on Fifth Avenue in Manhattan. I see Bitcoin being that valuable. It's not that I don't want to own real estate, but if in Fifth Avenue in New York, but that's the type of level of what we're talking about in what we view this as. I wouldn't take that property if I owned it in Fifth Avenue in Manhattan and trade that. I'm not selling that. If I own that today, why would I sell that? That's prime real estate. That's apex real estate. If I own that, I'm setting a price, and you got to pay it, because that's prime real estate. You know what I'm saying? So that's how I'm viewing Bitcoin. Like, I'm not buying it to sell it. I'm not accumulating it to sell it. I'm holding it for generations, because like that Fifth Avenue real estate in New York, it's far outpacing everything else, because it's prime. It's prime real estate. It's one of the best places in the world to own something. Does that make sense?
It does. Yeah.
So, and he's learning more about like Bitcoin and stuff. And you watch a lot of Sailor videos, and I've been starting to watch him too. He's awesome.
Yeah, I watched one right before I came here. That's where I got that 2010 thing from that I shared with Rich.
If you could explain Bitcoin, and let's say we have a viewer on the other side of the screen looking at it, you know, some short form stuff, like, how would you like explain it to them in the simplest terms, but possibly use an analogy like you kind of did, which was really good. Like how would you do that? Like do like an easy, simple.
The reason why there's such pushback on Bitcoin is because there's a generation of people, our age, let's say, you know, 40 to 65, let's say, that they didn't invest in this stuff. So they've got all their assets and other stuff, and it's a threat to them. Like, so they just don't like the young upstart. Is that, I mean, I think of that, you know, is there some aspect of that too? Like, a lot of the hate comes from it's a threat to what they own.
There's 60 million millionaires in the world. 21 million Bitcoin. So if all the people that had all the wealth accepted the fact that Bitcoin is going to do what we all believe and know it's going to do, they got to look in the mirror and be like, what the fuck do we do? I promised my mom I wouldn't say the F word this week, and I did it. Damn it. I was doing so
well,
good.
you were quoting that.
I was doing so good. But you know what I'm saying? Like,
yeah, no, right.
So it's a threat, especially the people that I talked about earlier being close to the money printer. Like, they can just print to infinity. And it seems weird that, like, when you're printing to infinity that, you know, it's debasing the money. So why is it still bringing value? That's how these people are accumulating hundreds of billions of dollars of wealth, because they're printing so much money, and the people can set the prices.
Yeah.
So they set the prices. They have all the wealth. And it's a threat to that. So if I'm sitting on, $100 billion of wealth and I own 0 Bitcoin, and, I'm watching this video of these two guys, Define Productions, talking about Bitcoin, taking over the monetary system and being better than owning real estate in Manhattan or being the next Picasso painting, and I don't have any of it. And I'm thinking to myself, even if I went and bought a bunch of it, like I don't want to own 1,000 Bitcoin and maybe have $2 billion of that when I have $100 billion of the old system. Because the whole market right now is only 600 billion.
Yeah.
So they can't convert that whole 100. They literally can't. If they wanted to, if that person had 100 billion, that's the other beauty of this. If Elon Musk, who's the richest, depending on the day of the week, let's say he has $200 billion. If Elon Musk said, you know what, I'm putting everything into Bitcoin, he can't. There isn't 200 billion available right now for him to get. He can't. The same way as if every single millionaire in the world, those 60 million millionaires, all wanted to own one Bitcoin, they can't. The same way as everybody wanted to have a Picasso on their wall, they can't, because there isn't as many of them available. Scarcity. The scarcity of this finite asset. So the analogy I was thinking of when you asked me that question, because I see these commercials every time I put a damn YouTube video on, Masterworks, right? Masterworks is available for people that don't have means to own a piece of a painting, right? So you can own a piece of a Banksy. You can own a piece of a Monet or a Picasso. You put your $20 in, and if you buy that painting and it sells, you can get profit on that, right? The same way as if you have $20, you can buy 50,000 Satoshis, and you can have a piece of the Bitcoin protocol. So the same way that you can own parts of these great assets, or you can like invest in a REIT to own maybe a portfolio that has one of those properties in Manhattan. But the thing that separates Bitcoin from all those other things that I mentioned, is it can't be confiscated from you. It's unconfiscatable if you self-custody it correctly. Whereas, as great as that property is in Manhattan, if you get canceled and you own that property and somebody says that you fondled some like 12-year-old kid and you get in trouble for something and they come to cancel you and they're coming for your property and there ain't nothing you can do about it. Or they can come confiscate the painting off your wall to pay some debt that you owe, or, whatever. But if you self-custody Bitcoin and you memorize the 12 to 4 seed passcode, or write it somewhere where nobody can get to it, put it in multiple places, whatever strategy you want to use, it can't be confiscated from you. You can go do 30 years in prison and get out and it'll still be there, still on the blockchain, ready for you whenever you're ready to get it.
That's crazy to think about it. If you can just remember your 24-word or 12-word seed phrase, you'll yourself, nothing could take anything. It's just crazy to think about.
Yeah.
U.S. banks could be grappling with at least $650 billion of unrealized losses in their securities portfolios, according to an estimate from Moody's.
That's the security. What I talked about last week, how the banking system works. When they take your money in, they put it into, they're investing it, trying to get a yield on that money, and those are the losses that they're taking on that money. Those are our assets that are in the bank that they're taking losses on. That's why I said last week every bank's insolvent, because every single bank is taking losses. Like, that's an estimate, the $650 billion. Like, that's estimated losses spread out throughout all the banks. Yeah. So again, if you spread that out through all the banks, that means that if 100% of the people went to get their funds at Bank A, they wouldn't be able to. And it'll never happen. I mean, I can't say it'll never happen. Let me take that back, because it did happen. It happened at Signature Bank and it happened at Silicon Valley Bank. But the likelihood of it happening is much lower, because the government showed that they'll backstop it, so there's no motivation for that. But if enough people were just fed up and just said, you know what, let's bank run Bank X, and they did it, they wouldn't be able to provide 100% of their assets on demand. Yeah. And that's basically what that means.
You think we can get these? Because I'm hearing a lot of rumors on Twitter about a possible Bitcoin spot ETF happening this week. Do you think people are just front running the opportunity, or is this just because we don't know? What, they got 62 more days before they can make a decision? Something like that?
We've been talking about an ETF for 10 years. Yeah. Grayscale initially applied, I think, in like 2013 or 14. So they've been on the books for it's been a thing that's been talked about as a potential for so long. I know we're super close and I believe it's going to happen, but it's still like a part of me is just like I believe it when I see it. Like when I see it trading, then I'll be like, all right, here we go.
Yes.
I know it's coming. I'm not saying that I don't believe it's coming, but I'm just like at this point it's just like all right, just like put up or shut up at this point.
Yeah.
So do I think it'll happen by the end of this week? Probably not. I think we're looking at the latest. Like I said, I've said this before. I'm like 80% sure it's going to be in January. If it's not January, it'll be sometime in March. It'll front run the halving.
Okay. All right. I want to talk about, and I want to give some insights. You know, obviously, what the Lightning Network is built on top of Bitcoin. I do want to talk a little bit about, you know, what I'm bullish on and what I see has value for 2024, and I'm excited. And they're already, these coins I'm about to talk about are actually up, you know, 20% in the last week. So they're called layer 2s. So we have Ethereum, and I know you're not a big ETH guy, but Ethereum is the settlement layer. And then we have these things, these protocols, these layer 2s that are built on top of Ethereum. They're the execution layers. And I just witnessed it the other week when the market was ripping. If you wanted to transact on Ethereum, we're talking $40-$50 a transaction fee.
And what do they call that?
GUE, gas fees.
Right. Yep. So
what was that? $40-$50 for a transaction. It's slow and it's expensive to interact on the Ethereum layer 1 mainnet.
You're not doing a good job of selling me on Ethereum right now.
I'm not selling you on Ethereum. So these layer 2s, for example, Arbitrum and Optimism, not financial advice, these are built on top of Ethereum. So now when you take your assets or your value from the Ethereum layer 1 settlement layer and you send them to these execution through a bridge, bridging the value over to the layer 2s, when we're in a moment of, you know, dramatic price action where things are accelerating up or selling off down, if you want to sell an asset on the layer 1, it's going to be expensive. Now, if you have your assets on these layer 2s, when those days do happen, which they do happen, you're going to want to be able to transact, you know, fractions to pennies on these layer 2s, and they're very fast. So think of them like an execution layer, kind of like the Lightning Network on the Bitcoin. Mm-hmm. And so far, this is a narrative. I'm not saying I'm going to marry these coins, but I see value in this. And there's this website called Layer 2 Beat, and I think the total value locked for layer 2s are upwards to $12 to $13 billion. So what I like to do is just follow the smart money, not the dumb money. So following the smart money is see where the value is going, front run the opportunity. Now, I was buying these layer 2s when the total value locked for all layer 2s were like just under $1 billion. So we did, 12x just from the lows on TVL, total value locked on these layer 2s. And then I buy the native tokens, OP and ARB, and then I'm just holding them. And what my plan is just to rotate it, you know, when things get crazy. I don't think, you know, people have a plan coming in, or they do have a plan, but when you're drunken with your drunk goggles on because your portfolio just did a 10x, you're not going to want to sell. And we're greedy or envy. Like, that's one thing to be cautious of when we're in the peak bull, is not just be greedy, but don't be envy either, because there's going to be people on Twitter that just did a 20x, 30x, and we like to compare ourselves and have more. So, you know, think rational when you're coming into this market, and stick to a plan. Is write it on a notepad, have it on your computer, notifications on your phone, because it's just numbers on a screen at that point until you actually take profits. So the layer 2s are the narrative that I'm bullish on, and that's a category that I'm, you know, really diversified in. Are there anything like that you're specifically bullish on, or is it just Bitcoin?
Bitcoin.
I mean, it's a safe play. It's a safe play. Isn't it crazy how, like, people on the outside world look at Bitcoin as risky, and then, like, if you're actually in crypto full time, you look at Bitcoin as like the safe asset?
There's nothing riskier than holding the United States dollar right now.
Yeah.
It really isn't. Well, I mean, let me rephrase that. There's a lot of other currencies that are much riskier, but in comparison, it's much riskier to hold the United States dollar and nothing else than a lot of other things, a lot of other assets. I mean, I would rather have U.S. dollar than Canadian dollar, euro, because all the other actual paper trading currencies, it's the best shitty trading currency of all. But I'd rather have my money in things that trade against it than that actual trading instrument.
Inflation's much worse in some of these other third world countries where they actually buy U.S. dollar and like they. But like, it's cool that they have an option now. They have Bitcoin, but before we wrap this up, do you have any? Looks like you got something.
No, I was just thinking about I was gonna say something about real estate again because I know we were gonna hit that. I saw a couple things on Twitter when I was researching stuff for the podcast today about some default rates. I think I sent one to you that we didn't go over yet. The default rate of mortgages taken out in the last 12 calendar months is up 65%. So people are falling behind on mortgages that were taken out while the rates have gone from 3% to 8%. I looked 3 days ago. I haven't looked since, but I was just playing around with stuff. And subprime, which would right now I think 620 is the lowest that you can qualify for FHA loans, 9.2.
That's crazy. I would just stick to renting. This is a renter's market. Do you agree? I think.
You know what? It's crazy because imagine buying a house right now and getting locked in a 30-year. The rates are coming back down. They have to because they're not going to let the market crash. The rates are not going to 15, 16%. It's just not going to happen. The age of money printing that we're in now will not allow that to happen. Can't. So the rates will have to come down again, and they'll have to print again to satisfy the national debt. So you're locking in at 8 and then struggling to pay that, knowing that at some point in time you're going to be refinancing, which will be another bill that you'll have to pay because when you refinance, there's fees with that. It's just following bad money with more bad money. It's just it's a bad spot to be. You're probably right now. It probably is. If you're searching for a property and you're not, and you don't, just stay where you're at. If you're in a mortgage that's in the 3 to 5% range, just gut it out for a little bit because rates are probably going to be coming down in the next 2 to 3 years, potentially, maybe earlier. But if you don't and you're renting, you're probably just better off. We're probably in a place right now where renting is probably cheaper than a mortgage.
It is. I just read something on it.
I know because my mortgage would be there's nowhere in this area that we live where I would be paying what my mortgage would be if I bought my house now instead of 2021 2 years ago. I'd be living in a penthouse somewhere. It would just be absolutely ridiculous. So I would have to be renting to get what my mortgage is probably, which is asinine.
Good stuff. Don't trust, verify.